Well, good morning, everybody, and welcome to the Kushner Report by Dennis Kushner, who most of you know. Dennis is a partner with Fordham Road Collaborative, and we're very excited to have you join us. This is the second version offering of the Kushner Report. We started last month, and many of you were here. Thank you. My name is Robert Brancatelli. I'm the founder of Fordham Road Collaborative and Senior Associate Director of the Silicon Valley Executive Center at Santa Clara University in Silicon Valley. The session will start. We've started it. We'll go no later than 9 o'clock. And those of you, you mentioned last time you'd like to hang on to have more discussion. That's perfectly fine. We can do that. And but those of you need to go, obviously, please go ahead. We'll go through the agenda in just a second, and we'll show you some slides. I should let you know that next month for December, I think it turned out to be Christmas Eve, so we decided to give everybody Christmas Eve off, and so the next meeting will be January 28th. That's January 28th, 2021, and you can get information on that if you simply go to Fordham Road, one word, .net. And so a couple other things. This session is being recorded, and we will put the recording of this onto the Fordham Road website, as I mentioned. And also, if you do check out Fordham Road, again, one word, .net, we do have other videos there and some information and resources you might be interested in. So with that, let me share the screen, and I'll start by introducing Dennis. So that's Fordham Road, as I mentioned. You can see, actually, you can even get updates on the Kushner Report if you go to Fordham Road Collaborative. And there's Dennis. And as I mentioned, this is from 8 o'clock to 9. We'll go no later than 9. And as most of you know, but I'll just reiterate, Dennis is a partner with Fordham Road Collaborative. He's based in the San Diego area. Has led turnarounds, restructuring of small to mid-market companies, and as you know, as CEO, COO, CFO, he's done all of the C. He's done just about all of the C-suite functions. Hands-on experience in finance, accounting, operations, M&A, really good in business development, and he's really contributed quite well, as many of you know, to top line, bottom line performance. And these reports, we're really happy to have Dennis be able to do this for Fordham Road Collaborative. So thank you, Dennis. One other thing is, as you go to Fordham Road for copies of this or the link to previous reports, there's just a video click that you can do. And with that, we have the Kushner Report. Dennis, take it away.
Okay, well, good morning and welcome to the Kushner Report for the month of November of 2020. It's hard to believe that we're 6.5 weeks away from 2021. It's been a strange year that none of us have ever expected, and we see there's some positive signs forthcoming. So it's been a tough year for everyone. So let me start by, we'll go to the first slide. Let me give you a quick overview of what we're going to do now on the agenda. Robert, okay, we go there. So what I'm going to talk about today are key economic indicators, the global economy, domestic economy, mergers and acquisitions, and other significant economic news that takes place. Okay. I'm going to focus this morning specifically on some key economic indicators. We're going to cover gross domestic product, inflation, unemployment, and the price per barrel of oil. So let's take a look at this chart. So what we've decided to do is come up with some slides so that everybody can take a look at what we're doing here rather than just talk. You get a chance to see what we're going to do. So first of all, for the full year, global GDP around the world is projected to come in at a -4%. And going forward to next year, we're looking at a positive 5.6%. And again, this is because we see the improvement in business taking place around the world once we start putting the COVID virus a little bit behind us. In the United States, the GDP is projected to go out as a -3.5 this year, followed by a 4.2% growth next year. Inflation, the good news here, it's been ranging between 1.8 and 2% for the year. It's been at that level over the last 2 to 3 years, and that should continue for the time being. We'll have better information in January in terms of looking at forecasted information for the entire year. And core inflation essentially is at 1.5. That means We exclude food, energy, and volatile prices. The unemployment picture improved. For year end, it's looking now more like 6.8%. And unemployment for next year is predicted to go down a little bit less, around 6.5%. The California unemployment report is not due out till Friday. However, last month we projected in California to negative 10.8%, and unemployment next year somewhere around 8.6. Keep in mind that California is usually the last to go into the recession, and we're the last to come out of the recession. So at this point, you can see there's a difference of about almost 4 points from last month to this month. And then finally, we take a look at the price per barrel for oil. The range is somewhere between $42 and $43 a barrel. So let's take a little bit of a look at the global economy. These are the areas I want to talk about this morning. First of all, if you look at the Eurozone, the third quarter GDP jumped more than 12% quarter over quarter, although the bounce did not take care of the losses we saw during the early part of the year. However, moving forward, there are concerns about the recovery, given the fact that the COVID virus has popped up again, and we're seeing more cases. So we'll have to see where that goes. Go back one slide, Bob. Go back again. Okay, stay here. So let's talk a little bit about Canada. Good news is in Canada, we're seeing encouraging economic rebound is continuing, and they're turning around their economy. And the prompt is that the central bank will stay on hold in Canada. They will not change the rates. Now, looking at the Mexican economy, it's come under significant stress in 2020. And what we've seen is it's prompted the Central Bank of Mexico to once again lower their overnight interbank rate by 25 basis points down to 4.25%. The economic contraction in the second quarter was the worst that they've seen in decades. It was down 17.1%. However, the rebound in the third quarter was around 12%. But retail sales were also down substantially. As you know, they do a lot of retail work and all over the country, and that was down about 10.8%. The United Kingdom had a record third quarter. They grew at 15%, and they're looking in, but however, it's starting to slow again because the virus has popped its head up again and going in the wrong direction. The Bank of England, however, eased monetary policy further by expanding its asset purchase programs by larger than expected. They're going to purchase 150 billion pounds of effort to continue to keep the economy above water. And they'll continue to purchase various kinds of security notes and so forth, going further into probably 2022. Asia and especially China are the bright spots in the global economy. So we're seeing China along with South Korea and Japan are doing well economically as they continue to contain the spread of the virus in their respective lands. So they've got some good programs going on there. China is projecting the fourth quarter, which would be October, November, December, to grow around 5 to 6%. So they're back on track. Okay, next slide. So let's take a look here. The following slide, we're going to take a look at the domestic economy. So first of all, for many of you that didn't know this, the third quarter was just unbelievable. It was a blow up. It went out at 33.1% for the third quarter. This is the second highest rate in increase since World War II by quarter. We're still behind though for the full year. We're still projected to go out the end of the year around 3.5% because of the coming back from as the virus continues to go behind us. And again, I'm not going to talk about vaccines today, but as all of you have heard, there are a lot of companies that are virtually on the crest of coming out with some product. Maybe by the end of December, beginning of early year, there's at least 2 American companies that are very, very close. Consumer spending significantly stronger. The key is here that we've seen less spending with services that require interpersonal contact. So a lot of this is being done online or going to a store specifically. So sales were strong. They grew at 28% in the last quarter. The Federal Open Market Committee, the good news is here, they said on the 5th of November, they're going to leave the market alone. They're not going to make any major changes to the policy on interest rates, probably going into 2023, unless we see some significant changes. They also have agreed that we're going to continue to purchase $80 billion in Treasury securities and $40 billion in market-based securities on a monthly basis. So that's helping stimulate the economic growth. Now, what's interesting here is a lot of people asked questions last month about the rental impact. Let me tell you what's going on here. The uncertainty about households' ability to pay rent has grown following a series of failed stimulus negotiations. The real question is how many households could be at risk once the national eviction moratorium expires in the next couple of months. Hopefully, under the new administration, regardless, we'll get some things taken care of to take care of that. That's growing, and it's a pretty sad situation. The CARES Act estimates that by the end of December, 1.4 million rental households will owe approximately $5,400 in rental debt, which is significant. Now, looking ahead, I mentioned this last month. I want to mention it again. As the presidential election comes to an end, the new administration is going to be faced with some serious issues that will impact the country over the next 4 years. First of all, the fundamental areas of taxation, regulation, spending, and foreign policy are critical variables that will set the stage for continued economic growth, or we face the significant contraction due to the virus. So these are uncharted waters, essentially, and we'll have to come to some scrutiny when we move into 2021. So there's a lot of unknowns facing us at this point. And as we get through the holiday season, we'll see how things unroll here. So one of the things I wanted to talk about is the energy sector. So what's interesting, the question is it going to be reshaped? Well, the energy sector may be reshaped under the new administration. So the new administration may take steps to curb U.S. oil drilling and reorganize the fuel focus industry, such as increasing the use of renewables. However, it's not clear how much latitude a new administration would have to maneuver and take on the oil industry, as you know, is a major vertical market in the United States. We could see a limit based on states that have shale production and reduce their production based on changes in regulations. So oil and gas has already been hammered due to the pandemic and the increase in demand that we previously saw by many times over, in terms of the credibility of the recovery. So we'll have to wait and see where that goes. Go back a couple of years ago, 3-4 years ago, when we saw the price of oil was somewhere around $60, $70, $80 a barrel. And now we're much lower. We're at in the $40, $42 range. And even though the Middle East and Russia and other countries around the world have cut production, we're still around the $42 a barrel. And that's based on demand. Liquid gas construction of new pipelines, terminals in the United States have emerged over the past year. As a global exporter, we've become the major global exporter of oil and gas, liquid oil and gas. And the sector could go under scrutiny in the future, be forced to address the reduction of emissions from the country's shale fluids. So if you look at renewable energy, this could be the lead of the class going forward as the super growth of clean electricity. So we're seeing the focus here is to eliminate carbon emissions from the power sector by 2035. And as you know, California has a program now that by 2035, they expect that all vehicles in California will be electric. And we'll see how long that goes. It's going to be a very, very tough challenge to make that happen. Coal, on the other hand, we can see the acceleration and the decline of the source of this fuel as utilities continue to shift to cheaper and cleaner natural gas and renewables. So that's just kind of a touch on the oil industry. Next slide. As I mentioned earlier, I covered these areas here. These will be the 4 areas that we want to watch as 2021 unfolds. Okay. So now we move into some of the other variables. What I'd like to talk about right now is inflation. As I mentioned earlier, inflation for the last 12 months at the end of October was running at 1.2%, which is below the target average, and compared to the 1.4 that we saw in September. So inflation is still holding low right now. We'll see what transpires over November and December. As you know, it's a holiday season. There's going to be a lot of prices going up because of limits on certain things that we have in the toy industry and everything else. So we'll see what happens as that unfolds. Trade exports increased by 3.7 billion last month to 123 billion in September. The good news is it's increasing. You've seen growth in foods, feeds, and beverages increase by 1.6 billion. If you go back earlier in the year, we had a real problem with soybeans because all of a sudden we had an abundance of soybeans and we couldn't move them out of the country. Well, last month we shipped $1.4 billion worth of soybeans. So that business is starting to come back, which is a critical agricultural product for the United States and specifically in parts of California. I want to take a look at the The trade deficit, good news here is that it dropped down again by 4.7%, went out around 64 billion. Go back a few months ago, probably the latter part of last year, we're running in the 50s. And because of the pandemic, everything has shifted. So hopefully we can get down to that 50 or even below with some of the rules and restrictions we put on China, because that's been the biggest problem. The Chinese and American economies on imports and exports, trying to balance that out. Retail sales increased by only 0.3 of a point in October. That's below the 0.5 of a point that was expected by economists. And this is worse than the 1.9% we saw growth in September. So keep in mind that we're now in November, December. We should see retail start to grow because of the holiday season. You'll see obviously more online shopping than in stores. So hopefully we'll see those numbers improve as we go forward. Let's take a look at the U.S. jobs report. So here's some good news. First of all, payrolls continue to increase. If you can see here, 638,000 in October. Even though it was lower, it still had over 500,000 jobs increase. The good news is unemployment dropped to 6.9% in October. That's a full percentage from September. Now keep in mind, as the pandemic comes back, we may see that number go up. Hard to tell yet to see what happens, because there's only about 6.5 weeks, 7 weeks left in 2020. So take a look at the following sectors that either increased or contracted. Business and financial services has been strong all year in spite of the pandemic. If you look at the government, keep in mind the decline there, more than half of those jobs were part-time people that were hired to do the census. So a lot of those jobs have disappeared, and there's a few left and from that perspective. And then there were other jobs that were cut in government because of budgets, as you know, like Los Angeles, Florida, other states have cut jobs because of what's transpiring, not with the lack of revenue and taxation. You look at the leisure and hospitality, good news here is it was up 271,000. The bad news is going forward, we're seeing more lockdowns in California and other states. So you may see those numbers dwindle substantially over the next 6 or 7 weeks. Manufacturing, which is critical, that was up by 38,000. And you see retail up 104,000. And then you've got companies like FedEx, UPS, Walmart. All of these are going to be hiring a lot of people over the next 2 months. So we should see those numbers go up. Okay, next slide. Okay, Robert, okay. Let me tell you about the California report. The numbers, go ahead and show that. The numbers here are from last month. The reason is the Beacon Economics, which is a great group out of Los Angeles, puts out reports specifically. Their report is not due out till Friday, obviously, so the data won't be updated until January. By that time, I'll have the data. But last month, we added 96,000 jobs in the state compared to 100,000 in August. At that time, the unemployment rate was at 11%, and you can see it's down. So it is going down. I won't go into these different vertical markets, but those we covered last month. Okay, next slide. So let's take a look at factory orders. The good news is on the factory order side, we saw that factory orders increased again this month by 1.1% in September. This is critical to the economy. It's the 5th straight month of gains we've seen, and continue to be a steady recovery in manufacturing, both in orders and in hiring. And so we've seen other durable goods increasing as well. That was up 1.9%. And again, that's 4 months in a row we've seen positive signs in that area. This is very good for us. If we take a look at small business confidence levels, it was relatively unchanged last month. It's still around 104.0. Keep in mind, anything over the basis point of 100 is very positive. That's critical for us. Small business confidence, consumer confidence in the month of October was a little bit more less optimistic. We saw that drop down to 100 basis points. And so it's bordering on the concerns we have going forward. Again, that's a lot of information that we continue to collect on a daily basis. Crude oil prices, I mentioned earlier, we saw them close at the end of October at $41.30, again, still below the $42 range. And it's just been vacillating month by month between somewhere less than $1. The housing market. Last night I got information on housing starts. So the housing starts rose 4.9% in October to 1.5 million new units. So this is, the housing starts again, topped expectations. So this is a good sign. This is the 6th month in a row we've had growth. So this is very positive for that part of the economy. And if you want, we can look at interest rates, for example. One of the things I want to talk about here is we said that the federal bank is going to hold everything, and that's going to stay for the time being, running relatively flat. The mortgage rates, let's see here. What I wanted to do here is cover, let's see, housing starts, okay. So what I want to look at now is new home sales. So this morning, I got the report about 4 o'clock in the morning, so I hurried to get this updated for our meeting this morning. So very good news in the state of California. Sales were up by 14% in October. And this is, again, it's fueled because of the pandemic conditions, low interest rates, a low supply of product, and high earners are seeking more space. So this is very good news for the California economy. This is still a very hot market in the state of California. So let's take a quick look here at a couple of the counties. For example, in Los Angeles, we saw medium sales prices go up by 15.3% to 715,000, while sales were up by 11.2%. Orange County, for those of you that live in Orange County, sales were up by 10%, and the mid price is up to 795,000. Sales were up by 24%. And in San Diego, for example, the median was up 13 to 650,000, while sales were up by 23%. Now, keep in mind, we're moving into November and December, so we should see a slight drop off for this until probably the middle part of January. What I want to talk about productivity. Productivity is released only at the end of the quarter. They used to do this monthly, but now we're getting it at the end of each quarter. So the data came out a few days ago. Productivity increased 4.9% in the quarter, which is very, very good. We saw that output increased by 43.5%, and we saw that work hours increased by 36.8%. Take that into account because of all the downturns and all the businesses that have been closed or had it downsized during this time frame. Okay, next slide. I want to talk before, go back to one slide. I missed a data point for everybody. Typically, go back to one slide, Robert. So look at the very bottom here, company displacements. Typically, what I like to do is only cover those companies that had major displacements during the month. The good news is only 2 companies this time versus 14 that we saw last month. This time we saw Boeing lay off another 11,000, and Raytheon revised their target to 20,000. Other companies had relatively small layoffs. So that's a good sign at this point, at this time of the year. Okay, next slide. Okay, so now one of my favorite places is to talk about mergers and acquisitions. This marketplace has been growing every year over the last 5 years. Keep in mind, as organic growth has been relatively flat for a long period of time, companies are going to grow by buying their competition or by buying and going into new vertical markets and new segments to increase sales. So Dunkin', which was usually, well, in the past was called Dunkin' Donuts, if you will, is being acquired by Arby's. If you think about Arby's, Arby's has a number of chains in their facilities. What this does, though, this is a deal worth $8.8 billion. What this will do now is make this chain the second largest chain in the United States in the restaurant business to McDonald's. So they've moved up to number 2 in the United States. They've also announced that they're going to close 800 stores. Now we'll take a look at Klein's Churchill. What this company is doing right now, they're looking at, as you remember, AT&T bought DirecTV and some other entities, and they basically don't fit. So what we're looking at now is that the consideration here is that they're going to put a stake into AT&T for DirecTV and some other entities that they own, and eventually the plan is to buy them out completely. So you'll see that happening over the next 12 months. For those of you that are familiar with a company that's called Quick Delivery, Bevmo has been out there for a long time. It's a great place to go and buy wine. They have sales all year long and everything else. Well, Quick Delivery is now in the process of acquiring the company. This is going to be a deal worth about $350 million. So GoPuff has 200 fulfillment centers serving more than 500 cities around the country. And the company specializes in quick turnaround delivery of products. So as the liquor beverages market is soaring, the company has made a strategic decision to enter and expand their business portfolio. So there's a perfect example of moving into and creating a new vertical market in the liquor business to take place in this area. So this is a good move on their part. Company called Merrick is a major company in the biotech industry. They're purchasing a company called Velos Bio. It's a San Diego-based company involved in developing products for cancer treatment based on inhibiting proteins. So this is another company in San Diego that's being acquired. Since we've lived here, you've seen most of the companies that are acquired in the biotech space have been relocated out of California. So this could be happening. There's been no determination yet at this point. We have a company called Spotify. As you remember, they went public not too long ago. They're acquiring a new platform called Megaphone. So who is Megaphone? Well, Megaphone helps advertisers target 60,000 audiences across the country, especially for various products. What they want to do is capture more advertising dollars. So this deal is worth $235 million. And at this point, that's the second largest deal that Spotify has done. Again, their plan is to continue to buy companies in different vertical markets to expand their platform and increase their advertising revenue. Okay. Next slide. So what's interesting here, I like to focus on what I call other significant economic news. What we're seeing is, if you see the first one, it's called CRBE. Well, who is that? Well, I'll tell you what. CRBE was called Coldwell Banker Richard Ellis. And in fact, what we've seen here is the fact that this company is one of the largest companies around. And what we're seeing now, they have over 100,000 employees around the United States. They're the largest provider of these services. They made a decision to move out of Los Angeles, and they're relocating their corporate office to Dallas. And since I think it's been 2016, 17 timeframe, you can believe 13,000 businesses have left California for other destinations. And we've seen some major ones like Toyota, et cetera, and this is going to continue. So they're leaving Los Angeles. The people that are in the office will not be relocated to Dallas, but they won't be laid off as well. They'll be redeployed. Walmart continued to discuss the robotic situation. So for a long period of time, they were involved in the robotics area substantially, putting robots in all of their different entities around the United States. What they've decided to do now that the pandemic is here, we're seeing now that they're scrapping the idea because they feel that a lot of the employees now can do the same type of work in this particular time frame. So they're holding back on expanding on robots. In some cases, they're getting rid of the robots. Applebee's is another major retailer franchise. They're on the process now. They're going to buy Pizza Hut locations around the country. And the deal is worth somewhere around $816 million. You may recall that Pizza Hut filed bankruptcy several months ago and closed about 1,300 stores. They had something like 7,500 stores across the country. So that deal is taking place as we speak. Now we're on a product called Zoom. Anybody heard of Zoom? Well, all right. So what's happening is Zoom started around 2016. Robert and I were using that on a course that we did, and it was great. You could call somebody and they'd help you. You can't get a hold of anybody these days. The company has exploded, and it's unbelievable how many people use Zoom around the world now. But to that effect, we've had some issues. And so, for example, let me tell you exactly what transpired here. The United States government got involved, and Zoom agreed to boost its security to settle claims that it misled users about the access to online meetings and other issues, as according to the Federal Trade Commission, around security. So since 2016, the video conferencing platform has skyrocketed in popularity. And now, especially in light of the coronavirus, it's blown up. It's incredible. So the company has offered solutions to encrypt more information to protect the data. And the real key is now they're going to be measured on a monthly basis to make sure there's security in place to prevent information from being taken, et cetera. So this is good news from that perspective, but they've been forced to do that by the government. The good news is they have not sustained any heavy fines. If you're familiar with JCPenney's, one of the key retailers, it's been around for 118 years. They filed bankruptcy months ago. They had a buyer in the East Coast of North Carolina, a chain that was contemplating buying the company, changing the name and basically integrating them into their retail outlet business. But that deal fell through. So recently, asset management company called Brookfield and Simon Property Group have decided to buy the enterprise and basically keep them in the malls, reconfigure how they do business and so forth to make them hopefully a viable business again, because they've been around a long time, and they've been, 1 foot over the cliff and 1 foot on a banana peel. So the EU recently, just to mention, about a week ago, our friends at Amazon is growing by leaps and bounds. As you know, they're getting into the drug business. We'll talk more about that next week, rather in January, in the pharmaceutical space, which is sort of raised the alarm, if you will. What happened is regulators, antitrust complaint, retailer, unfair advantage in France and Germany. So the complaint states that Amazon was using data to gain an unfair advantage over their merchants using their platform. So Amazon now faces a fine of up to 10% of their annual revenue worldwide, which could be in the billions of dollars. So the company has basically rejected the accusations, if you will, and they're taking legal action to try to stop this from happening. And then finally, we want to talk about mortgage demand, which is at the lowest level in the last 6 months. We've seen this whole thing slowing down. Mortgage for homes, for new homes and refinancing, dropped another 3%. But a year ago, this is 16% higher than we saw a year ago, but it's slowing down now. And I think in some cases, I've talked to my friend Henry, we're seeing a slowdown now in the marketplace as we go into November and December, because now you're focusing on the holiday season. So you'll see probably a flattening out. And I would expect this to pick up as we go into January of next year. So with that in mind, what I'd like to do, the next slide we have, is your turn to open up the discussion for Q&A. So let's see who has some questions you'd like to ask. So why don't we unmute everybody and see who would like to talk?
Yeah, let me, Dennis, let me unmute everybody.
Yeah, we can pop the slides off too.
Let me just get out of that.
Okay. Paul, have you got a question for me? Why don't we unmute these and we'll see what happens.
Yeah.
Dennis, can you hear me?
I can. Go ahead, Alan.
I was somewhat puzzled by the low drop in unemployment in 2021. Has the vaccine not been taken into account in that projection?
No, I think at this point, until something is viable and we know when it's going to be available over the next several months, you really can't do that. You have to really look at this in terms of what we have right now availability. One of the vendors said yesterday that they're 95% along. And so what I'm hearing from other people in the biotech space, the plan is to get this vaccine out as soon as possible, maybe as late as the end of December. And what will happen is first responders, those people will be the first people, and then they'll have a litany of list of which ones are going to go next. And probably by the spring, they're hoping to get the virus start getting distributed out around the United States completely. That's the plan as we stand right now.
Thank you.
Kevin, I haven't heard from you.
Yeah, I was going to make a point, Dennis, and thank you for bringing it up. The Pizza Hut franchisor did not file bankruptcy. It's actually NPC, which was the largest franchisee, right?
Yep. Yeah, the parent.
Which is a huge issue. And I know that the background, like many other bankruptcies, is predicated on getting some advantages from the company perspective anyway, on the real estate side of matters, right? And clearly the multi-unit restaurants in general and certain service businesses are getting just clobbered, right, with the COVID and related matters. And NPC levered up a few years ago, and as a result, that elevator's coming down pretty darn fast, and that's hence their filing. They'll reemerge with whatever arrangements they come to with their various landlords, and reduce the number of stores that they have, but they'll be back out, is what I'm being told.
Right. Robert, can you unmute all the other folks as well?
I think, yeah, we sent an email message to them so they can unmute themselves. If you
Okay,
have
you
a,
guys can all click on yours and unmute yourselves. Just click on the,
Yeah.
okay, there we
yeah,
go. So,
yeah.
so one of the things to keep in mind is this. Over the past several months, I've been doing this, I was doing this in Orange County, and we talked about the different retailers. Very few retailers to date of the large groups of people have filed Chapter 7 or 11. I mean, Chapter 7 or 13 full liquidation. So a lot of these have gone into bankruptcy, Chapter 11, like, for example, 24-hour 24-hour club, the healthcare company, the gymnasium group is the second largest in the United States. They filed bankruptcy, but you have LA Fitness is not. So, a lot of these are going to come back stronger. They wipe out the debt. And of course, they're going to downsize because there's just too many locations across the board in all the different markets, whether it be retail, in the food business, the movie business. There's just too many outlets. And given where we are today, I think you're going to see a lot of those go away. Some of the malls, there's a mall in Orange County where Tim Sexton is. And what we found basically is that in that area, when one of the major retailers left as the anchor, the post office opened up a postal center. So they've opened up a postal area for people to go take care of business at the postage area. And at the same time, they've opened up some restaurants. So some of the malls are being reconfigured around the country. Mark? Unmute yourself, Mark. Bruce, any thoughts from you, Bruce Conklin?
I was
I'm
wondering,
not letting you get away with this.
it's going to be very interesting. I think, Dennis, we keep talking about the stimulus, but to throw stimulus money at companies while you're locking them down doesn't always make sense. I do think that there's going to be some opportunities for smaller companies under 100 million in sales to merge, to create more market share, because that's going to become more and more difficult, is marketing your brand, because people aren't just going to walk through a mall anymore and buy something,
Right.
So you're going to have to draw interest, and to build a brand, you got to have a bigger, like I have a client I've had for 4 years, and it's a shoe client. So they design shoes, they're built overseas, and then they distribute. Obviously their online sales have become larger and larger and larger, but really the sales of the company have dropped because it just doesn't really have a panache. So I think to compete with names like Nike, for instance, Nike don't just do athletic shoes. They get into all sorts of areas that impact everybody else, but the Nike name has such a panache, and you want to be like whoever is a key player. So maybe what we should be doing as providers here is trying to figure out with clients we know is their growth strategy probably should not be organic. If they really want to create value, say they're 50 years old and they want to produce a strong value to maybe sell their company when they're 55 or 58, I think they should be looking at acquisitions. And there is money out there, Dennis, to support this stuff, but you have to have a plan that makes sense. And I think these companies, I don't know as they can do it totally on their own.
Right.
So it's a real opportunity for us providers, I think, to help smaller companies. Maybe they're 20, they might have been 40 and today they're running at 25, but they don't have a big enough presence in the market, I believe. And I like to hear this from people that really understand brands. I'm not that person, but presence is so important, because we're moving away from the mall model, where people just mill around and say, hey, gee, I want to buy that, right? We have to go out and we have to get those sales.
No, I agree. And as I mentioned earlier, if you go back to I guess from early on, if you go back a long time ago to the 70s and the 80s, a lot of corporations would start buying companies, and some of them that bought companies outside their own vertical markets, it turned out to be a disaster. And so you look at Lowe's bought a company involved in what they were doing, and it didn't fit, and they spun them off. But at the end of the day, your vertical, as we mentioned, organic growth is relatively small. That is just the growth from your existing businesses and services. So if you really want to play and compete and move up the channel, if you will, move up to the top of the mountain, so to speak, what you're going to have to do is go out and buy other companies. And a lot of them, for example, small companies do what's called a roll-up. You find companies in other areas of the country that are small, you buy them, they're mom and pop shops, etc. And that's how you start building your company. Look at Oracle. Oracle has bought hundreds of companies over the last several years. I mean, they have a train, and every time you turn around, they add another element to the train. And what it is, they buy another business. They wanted to get into the cloud. They bought a bunch of companies in the cloud. They wanted to get into security. They bought companies in security. So you're going to see that continue. It's not going to change. You look at a company like Verizon, and in my mind, why did they buy AOL and why did they buy Yahoo? Okay, and to me, I don't think it's worked out in terms of what they were trying to do. So I wouldn't be surprised sometime down the road that they spin those two off. And of course, they're going to need people to help them from a consulting perspective of how do they spin it off and who's going to be the buyer. Brittany had a question regarding consumer confidence. And consumer confidence is really critical because there's so much information out there in the marketplace today. And I'm not going to call it fake news. Let's just say there's so much data out there that people are going crazy with trying to figure out what they want to do with their checkbooks, their credit cards, etc. They're concerned, but every time you hear that more people got sick, we're further away from a solution for the virus. More closures. So like in San Diego, we went into purple, which means everything is being locked down again in terms of if you want to go indoors to eat, to dine, or if you want to go to the movies, you want to go to the gym, everything is closed. So that really plays a lot on people's minds. Therefore, the consumer confidence level is up and down every month, depending on what data is out there. So I hope that answers your question, Brittany.
Does I do have a question about, could you comment on the purchase of Bitcoin by the government and your comment or just your opinion on it?
You know, I haven't really spent any time on Bitcoin. There are some people that maybe Bruce, Kevin would have a comment on that. I really haven't followed those kinds of deals because, you know, there's a lot of pros and cons about people either like Bitcoin or they hate Bitcoin. Some people have made money on Bitcoin and some people have lost a lot of money. But I really haven't followed Bitcoin to that degree. But Kevin, do you have any thoughts on that?
Yeah, it's one of those. Since it's not an area where this is both good and bad. A lot of regulation, right? So if people are willing to transact in Bitcoin, then it can work for them. There's been some recent issues with fraudulent activity, right?
Yep.
There's quote dark money that can flow through Bitcoin as well. One might question whether that was part of the original business premise anyway. Sorry. And then importantly, there's now some competition rolling into the whole cryptocurrency vertical.
Facebook.
So, yeah. So with that, I would tell you that for supply chain work, Bitcoin or cryptocurrency, really, not just Bitcoin, it actually fits very nicely because that's a data flow, environment that with the use of cryptocurrency, that flows directly with the demand forecasts and supply forecasts. So it works nicely. It's a good marriage right now so far. We'll wait to see what happens from a regulation perspective. My guess is that's going to become regulated, so it can be taxed, so that governing authorities will get their share of the gain. Unfortunately.
Okay, thank you.
You know, one of the things I wanted to talk a little bit about, and that is the employment picture. I think if you look at some of the industries we've seen, there's a lot of changes going on, and some of these companies that have gone under, or they've moved to other locations. There are people out there that are going to have to be retrained, if you will, with new skill sets, and that's going to be a major problem going forward over the next 2 to 3 years, because some of the businesses that have gone away or something to the levels they went down will not come back. And that's pretty clear. So now what do you do with all these people that are unemployed and don't have the skills to be able to go do another job? And that's going to be a major problem for this country, for the new administration going over the next 4 to 6 years. How do we train these people so they can get a job and take an active, productive life, if you will, in industry? And that's something that's going to have to be dealt with as we begin to come out of this situation with the coronavirus, beginning like in 2021. There are those people that believe that in the state of California, the employment picture will not come back here till late 2022 or maybe sometime into 2023 because of the businesses that they've either exited California, they've downsized to the point where they're not going to come back anymore. A lot of these people work in retail, hospitality. So that's something that's a big concern that I have going forward. I think my friend Tom Gallagher, who I sat on the boards with in the Bay Area, Tom is heavily involved in real estate. As I mentioned last month, San Francisco, the rents were down something like 31% in value. People going. The comment about New York yesterday was over 400,000 people have left New York City, leaving, and most of them are planning not to come back. So you've got a lot of things taking place here that we never thought about happening when this whole situation occurred back in March. Any other questions we have out there?
I guess one more, if you don't mind.
Go ahead, please.
What do you think the best career move to make, even if it's temporary, would be for someone who is on reduced hours like I am from my current job?
Well, I'll tell you what, I think I've talked to people in the past. I think, first of all, the areas that are going to be growing, first of all, the healthcare services side is really going to grow. You're going to see tremendous needs in the healthcare services area for people, for the different ages, if you will. That's going to be growing. If you think about cybersecurity, all right, and privacy, tremendous opportunities in those areas for people. And you don't have to be an engineer, and you don't have to be a computer scientist to get jobs in those areas. There's a tremendous demand out there for people in those two vertical markets. So I think there's going to be a lot of opportunity in those spaces. And as a result, new industries will start coming about as well. You see more things on the internet businesses, if you will, are going to be growing. So you're going to see a lot of movement from the old line companies and businesses, if you will, vertical markets, to the new. But I've been a proponent. I've been involved what's called InfraGard with the Secret Service and the FBI for the last 20 years. And there's tremendous demand in those marketplaces for people to work in cybersecurity. And that's not going to go away. That's going to grow and grow and grow because of what we're seeing happening around the world.
Thank you.
Lynn, any thoughts from you, Mr. Kane?
No, I'm good.
Not going to get away.
No.
Well, like I said, there's a lot of things going on. When we have this report back, and when we go into January, I'll have a lot of information in terms of what projections they see about the economy, the global economy. We'll have more data available. We'll see what's happening, what transpired for this year. Hopefully we'll have some information. Usually we won't know the real GDP for 2020 probably till March. It's going to take them time to get that. There'll be some estimates, but we won't have all the full numbers. So I want to thank everybody for joining us today, and Robert for putting the program on, and hope to see all of you in January. Any last thoughts from anybody before we call it done?
Happy holidays.
Happy holidays, everybody.
Happy holidays.
Merry
You safe out there.
Happy Thanksgiving.
Thanks, everyone.
Thank you all.
Bye-bye.
Bye.
Bye.